Hi, welcome to Neppy Invests, a video that's been a week in the making. So I created this video about a week ago, and every single day since then, something else has popped up. And finally today, I've decided to record this video Christmas Eve, so I can release this on Christmas Day. So more than likely, nothing's going to pop up in the meantime because trading's closed for a few days, for about 3 or 4 days anyway. So this company, or this video, is in regards to three companies. And what I'm calling those three companies are two bulls and one bear. I'll get into an explanation of what I define as a bull and bear in this case. But excited about some of these companies. So I'm looking at CleanSpace Respirators, a new company on the ASX, just IPO'd recently. Doneco International, a very old holding of mine. So I held this way back in 2013 or 14, and Integrated Research. I might have talked about Integrated Research in past videos, but I definitely haven't talked about CleanSpace and Doneco before. So what is a bull and a bear? So what I define a bull is a company that has released a positive announcement. So, and probably the most powerful positive announcement is a profit or earnings upgrade. So typically when you see that on the ASX or any exchange around the world, when a company releases positive guidance, so the market gets excited, you usually see the share price go on a bit of a upward trend. On the converse side, a bear is a company that releases a negative announcement, and the biggest negative announcement is if you see earnings or profit downgrade. You never want to see that for a company you hold, for example, A2 Milk, or in this case, it's one of these three companies, and I'll get into that in a second. So let's talk about the first company, and that's CleanSpace Respirators. So the fact that you've got the respirator name right there tells you what this company does. This IPO'd about a month, maybe not even a month ago, so it's not that long ago. Yeah, it's probably just over a month ago. And they've actually released two trading updates in the last month and a bit. So the first trading update was the 12th of November. So they mentioned revenue was between 34 and 36. They've also mentioned gross margins and EBITDA were tracking to prospectus forecasts. And EBITDA was going to be in the range between 14 and 16 million for the full 6 months ending 31st of December. Then just over a month later, they released another positive update, and this was increasing the guidance they made in November. So it looks like things are tearing along at a great pace for this company. So the revenue increasing from 34 to 36 to 39 to 41. That's a good increase. And gross profit margins and EBITDA, they're actually giving some numbers here, 77 to 79% and 17 to 19 million for EBITDA, which is an increase of $3 million compared to the previous update. So just in isolation, you'd think this trading update would have given a rocket to the share price, but not so, because right in the announcement they mentioned the business maintains that the current environment remains highly uncertain with several vaccines now approved. So just because they're in the respirator business, they're thinking that with the vaccines coming into play, that maybe their respirators won't be needed as much moving forward. And that's a definite possibility. And they're just raising their concerns, raising this possibility to the market. So in the end, the share prices didn't really take off. So this is the daily chart since IPO. So the IPO was actually in October. So it's been listed for just on 2 months now. And at the high in the trading history of this company was on the day of the IPO. So it got towards $7.50, not quite there. And then was sort of in a downward trend between the IPO and around the end of November or the start of December. It has been sort of just trending up. So keep an eye on this company, CleanSpace Respirators. Their ticker code is CSX. I do believe there is a recommendation fund that has recommended this company in their recommended list. I won't say who. Don't want to, steal their business. Anyway, that's CleanSpace Respirator. I don't know why that went back. Next company is Doneco International. So Doneco International has 2 casinos in Southeast Asia. I forget where. It's like Vietnam and maybe Cambodia, something like that. Anyway, I did once hold this company way back in 2013 for a very short period of time. Now, they've been through the wars since then, and market cap of only 80 million, but they do have, or did release, a positive announcement a week ago, so around December 18 or so, and that positive announcement led to the share price increasing by about 30%. And just the headline there, you can see why this was a positive announcement. So Doneco returns to positive EBITDA as COVID-19 impacts subside. So really good news for Doneco International. They were in negative EBITDA territory. And a couple of things, though, that give me pause. Now, first thing is they remain confident in securing mega bank approval. I always sort of have a bit of pause when you see banks or companies named like that, mega bank. That's especially in Southeast Asia or Asia, these banks or some companies are named weirdly like that. Not weirdly, but just the mega gives me pause. And anyway, this was in relation to a legal case with the Thai vendor. So I'm not sure where that's heading right now, but that's been an issue for a while with Doneco. Now, I'm just looking at their financials going back to 2013. It's been all over the place. So the share price rose to a high of $1.52 in 2014, and the market cap was as high as 512 million in 2015. And since then, both have just gone backwards. In fact, the market cap went all the way down to $32.9 million in 2020, and the share price went down as low as something like 3 or 4 cents. Revenue hit a peak of 143 million. Has been going backwards since then. Same with profits. And you can see some of those years we had profits of negative $194 million. That's probably because they've had some write-offs. Operating cash flow has been positive until last year. So the first year they were operating cash flow negative to the tune of -3. This probably had to do maybe with COVID-19. And really the price to book ratio and price to sales ratio were really low last year at 0.24 and 0.62. Those are really favorable numbers for a value play. But the question is, there are some risks around Doneco moving forward. So there is a sovereign risk, possible government intervention, regulations, that sort of thing. You never know what the governments of those countries they're in, Vietnam and Cambodia, I think, maybe Thailand, I don't know. Anyway, what they might do, increase competition. That's one of the things they did mention in one of the announcements is increasing competition. Industry, just gambling, that in itself could be a turn-off for some people. And the ongoing legal dispute with Thai vendors. So I'm not sure where that's heading, and who knows, again, with how that's going to play out during the future. So if that has played out fully, and you know that, leave a comment in the comment section, because I'd like to find out without doing any research at the moment. Anyway, why is it keep going backwards? So this is the weekly chart for Doneco since mid-2013. You can see the share price rose to a high of $1.15 at the early 2014. So I held it before that and sold out before it got to its high. I remember selling it around about 90 cents, and then I saw it go up to $1.50. I went, oh, what have I done? Another big mistake. Anyway, but through time, that has turned out to be an okay decision. You can just see a downtrend since then, a real solid, consistent share price moving down. Maybe through the past 2 years, it's been trying to form a consolidating base around about between 5 and 10 cents, but currently 6 cents. It has gone up from about 3 cents or so at its low to 6 cents. And we can see that in the weekly chart here, or the daily chart here, going back a year or so. It reached its low in the COVID-19 financial panic around March 23rd or so. So less than 3 cents, in fact. So probably around about 2.5 cents or so. Had a good uplift from 2.5 cents all the way up to above 5 cents. So you would have made a double money if you held for that long. But then the downtrend continued. It looks like it is trying to form that base around 3 cents, and then it's breaking up on the high side in the past 2 months, going from 3 cents to currently the price is still around 6 cents. I just had a look at the share price. In fact, I think it was 5.9 cents at close on Christmas Eve. So share price has been consolidating in the last few trading days around 6 cents. So this could be a bit of a breakout. We have also seen some increasing volume, which is a good sign that this is a potential for a breakout. So keep an close eye on Doneco, but there's some risk involved, which I'm not that keen on. And the last company is Integrated Research. IRI is a ticker code, market cap of 530 million, and you can see profit downgrade. So not the best news. And the reason for the profit downgrade was exchange rate movements, and which are unfavourable for them. So that's sort of more improving Australian dollar, increasing Australian dollar, and year-to-date trading. So you can see on the results side, they've mentioned that the expected revenue for this year and the previous corresponding period, and you can see significant decrease in revenue and profit from the previous year, going from 53 million to 41 to 47 million in revenue, and profit going down from about 12 million to 5 to 8 million. So that's fairly significant downgrades, and there's even more uncertainty moving forward. So it's strength in Australian dollar, that's what I meant to say before. So Australian dollar has strengthened by 12% over the current half year. So a company like Integrated Research, because I think they have a majority of the business overseas, wants the Australian dollar to be very weak, so they make more money. So if they make their money or get their cash flow in, say, American dollars, they have to convert that is the American dollars to Australian dollars. And if Australian dollar is really weak, then they make more money just because of the exchange rates. Anyway, so I also looked at the financials for Integrated Research, and so what I've looked at here is market cap, revenue, profit, EBITDA, and operating cash flow. I've just adjusted market cap and revenue just so they can have the same sort of scale, I suppose you can call it. So I've decreased market cap by 10 times and revenue by 2 times to get sort of the same scale. And if you go back to 2010, you'll notice that the market cap was sort of below 2010-11, was below revenue, profit, EBITDA, and operating cash flow, but through time it's now gone above those 4 metrics. So market has been increasing at a greater rate than the revenue, profit, EBITDA, and operating cash flow. And you can see that on the compound annual growth rate of the last 10 and 5 years of revenue, profit, and operating cash flow and market cap on the right there. You can see market cap over the past 10 years has grown at a compound rate or growth rate of 26%. So if you've held Integrated Research over the past 10 years, you've done fairly well at 26% growth in the market cap, maybe not the share price. I think the shares on issue hasn't grown all that much, so share price has grown by that much too. But you can see revenue, profit, and operating cash flow have all grown between 10 and 20%. In fact, revenue and operating cash flow have grown nearer to 10%. So the market cap or the share price or the valuation of Integrated Research has grown much stronger or much quicker than the growth rates of revenue and operating cash flow. Still been growing the business, but it's been growing at a slower rate than the valuation. In the last 5 years, it's actually been growing at a slower rate, not only revenue, profit, and operating cash flow. In fact, operating cash flow has only grown at 1% per year in the last 5 years. But even the market cap and share price and valuation has only grown at 8.8. So there is potential there. The growth rate of Integrated Research has slowed down. And does that mean it's going to keep slowing in the next few years? Maybe not. So this is a company just based off this I would probably stay clear of for now and wait until maybe the market cap or the valuation of the company pulls back enough where it's growing at a slower rate than revenue, profit, and operating cash flow. And then you have more room for it to grow, if that makes sense. So this was the chart of this is the chart of Integrated Research. So the immediate impact on share price was quite minimal, in fact. So on the day of the release of the announcement on the 18th of December, the share price only went down 3% or 3.5%, which surprised me a lot. So the market was actually anticipating or expecting this bad news, and that's why the share price didn't decrease as much. And in fact, the next day, share price went up 2.3%. Up to $3.12. Since then, the share price has pulled back to something like $2.90 or so. So the market is still, or the share price is still a bit of a downtrend since then. But you can see over the past about 4 months or so, the share price has turned from an uptrend into a downtrend. Share price got as high as about $4.90 in early August, and then has moved back to about $3. So it has moved down over 50%. So this is definite downtrend right now. There's no reason to buy in, even if you're a value investor, because this has potential to move further down over the next few months. There's even the potential of more profit downgrades in the future. So this is something to put on the watch list for maybe for 6 or so months, and just to keep an eye on it to see when it starts to turn, and that's when you buy. When the share price starts to turn into an uptrend, when sentiment shifts, that's when you buy a company like Integrated Research. Still growing, and I'd like to see a good entry point in the future. So that's all I've got on this video, two bulls and one bear. I'm going to do more videos like this. I like doing videos like this. I like to talk about companies that have positive or negative announcements. And that's all for today. So have a good day. I'm not a financial advisor again, so if you do need financial advice for your own circumstances, make sure you seek out someone who is qualified. That's all. Have a good day. Bye.